Today we're going to talk a little bit about what are some of the financial structures and financial models that you can use to increase impact within your business and as an investor both. And David in his presentation is as well going to talk a little bit about, from an investor perspective, where are some places that investors are now going in terms of financial models and financial structures. As we look at impact though at Vancity, and I'm now, as part of the partnership, I'm leading all of their lending and investing divisions, in particular trying to move the majority of those assets to be consistent with the values of the members. You know, so part of that will be things that we would think about here, new programs in green real estate and in nonprofit real estate. We're looking at local, natural and organic food and women's entrepreneurship. But a lot of it, I think like a lot of our work, is about going backward and going forward at the same time. You know, it's about how do you reinvent relationship lending in a bank in the way it was done in 1947 that still works today. The odds that your business plan happens is infinity minus one. So there's exactly one thing that can happen in the world that is your business plan, and infinity is everything else. And you're going to have an opportunity to get 10 minutes with me, and if you're lucky, you'll get a second meeting with someone else. And in that meeting, are you going to spend an entire hour trying to convince us that infinity minus one is the chances that you will succeed? That would be a mistake. So people start with the structure, and then they try and invent a company around it. It's insane. You can't start with the structure. You end with the structure. So, you know, you start with, how much money do I need to raise? Do I need to raise once or 3 times if it goes well? How many if it goes badly? And then I have to raise again. Is it growth or not growth? Can I exit at the end or can't I exit? Is it a cash flow company so I could potentially do it as a nonprofit? Or does somebody have to get out and get liquidity on the way through? You know, what are going to be the tricky bits, particularly for this particular company? But the reality is we're going to sit down and have a business plan that says, here's the margins we're going to make, and 80% of what we want to do for impact really makes sense. And the rest of it, just hush, because that's what we're doing. I mean, that's what's important to us. That's why we're doing what we're doing. And so we will create a business that will pay for the things that we love. So it's your job to convince us that you care enough about the things that you love that you will create the business that will succeed enough to pay for them. Remember that you know your business better than we do. If you don't, you're in trouble, by the way. And I do see businesses that don't know them better. That's a shame. You know it better, right? So why is it that everyone who, like, you've got the stacked deck and we don't, right? You know where every card is and you're going to choose to show us 5 cards. There's probably no successful company in my portfolio really, you know, that we saw coming in the way that they ended, right? None of us in our careers. Look at everyone who has emerged out of this with successful companies. If you tried to do it forensically, it would look a little ugly. You would be making very odd investment decisions. So I'm trying to allow for getting people where they're at and not trying to cook all the social stuff on day one, right? Because we tend to use all these mechanisms. We're going to prevent this and this and this. You can't do this without asking us. You can't do this without asking us. It's like a conservation easement. And we don't think enough about how do we allow for evolution. So what we said is, let's fix the structure and then work with, I think we can work with this entrepreneur. He's quirky, dude, but he listens and he's smart. The women's economy is the largest growth economy in the world. So in the next 5 years, the earnings that women have will go from $13 trillion to $18 trillion. That growth represents, so people will tell me on the international side, you can't ignore China, you can't ignore India. That growth represents twice the growth of India and China combined for the next 5 years. Like, look at how we talk about carbon footprint and sustainability today and think 10 years back. But the politics had ravaged the language around our entire industry. So we had to bail on the language and say, you can overperform doing things that are just quite sensible, thank you very much. And then we sat there for 20 years and we had Walmart take the green word back over. We've watched the most conservative organizations in the United States pick up words that have been abandoned 20 years ago by us in the marketplace. So now we have strange bedfellows.
Our fundamental belief is that environmental and social change and trends, that the greatest impact that you can have on that, the greatest lever to scale it, is in fact thinking through the issue of financial innovation. And when we started looking deeply into the environmental issues, one of the things that we kept coming back to was the fact that rarely was it products or technology that was the barrier to scaling of the business, the change of the marketplace. More often than not, we came to the conclusion that it was financial innovation, that someone was able to turn the benefits model on its head, was able to somehow realign the incentives, realign the benefits, and therefore we saw scaling. And so we dedicated our firm then to investing in firms that were creating financial innovations that unlocked very specific strategies within sustainability. Are you partnering with investors that categorize themselves as traders, as investors, or as owners? And I think the way you articulate those words are critically important. And if you're an investor, you're looking to be entertained. Come in, you got your 20 minutes, and you know this is interesting, and or not interesting. Next, our attitude is exactly that, which is that we're living in a transitionary state right now, and that means that we have to do something that most of my venture capital peer group would think was insane, if not stupid, which is spend a lot of time with the entrepreneurs. The fact that who you invest in and who invests in you are equally important. And by the way, that's a big piece of advice. The only way you're going to do that is this very expensive way of living with each other. So it was very important to us that this team, who had been heralded as deeply authentic for 15 years as the leading green development company in the United States, actually believed that we were good for them on the long-term basis, and that we believed in their mission and alignment as much as we believed in them. We needed to believe that they were the highest integrity and that the sense of green was deeply embedded, so that we could actually build a brand that was deeply authentic and therefore a long-term value and a long-term competitive advantage. What was actually underlying the dot-com era was that these business models were so radical. If you gave stuff away, you would actually build value. I mean, we actually believed that for a good 3 years. We believed that the turning upside down of basic supply-demand, the basic balance sheet, the basic income statement, and that we believed the juice that the internet model was going to somehow be different. I had this fear that social venturing and impact investing is going to go through the same sort of assignment of all these wonderful attributes.
You know, don't overprice yourself in the marketplace. Don't look for investors that have to get everything the first time out. Remember what we said about evolution before? They need to get the core. They don't need to get everything. Don't try and make them understand everything. Don't just shop for the money, shop for the relationship, right? So that's the underrated piece of advice that we both have. Relationship is important. Long-term change means a long-term relationship. Look for someone that keys in on effectiveness. Listen to the ears, right? Like the conversation is, who asks you what's going to be most effective with my money, with your company? If they go right to efficiency, it's okay to read the numbers first. But if they read the numbers and go, you know, I think this would work better, what do you think about this? That's effective. If they go, you know, we could move production and it would drive another 2% here, that's efficient.